Saturday, at least it is here for us, but we're glad to have you and just to spend an hour with us to talk about some helpful real estate investing education that can help you as you use your self-directed IRA to grow your wealth. So I'm just going to run through just a couple of quick introductory slides, share some announcements with you guys, and then I will let Jason take it away. But first is our self-directed IRA social. So this is a big event that we used to host in our office every month, formerly called the $1 Trillion Investment Mixer, but we have rebranded and we are bringing it back in 2022, even bigger and better than before, really giving you guys an opportunity to network in each of your local cities. So in Houston, it's the first Tuesday of every month, Austin the second, and Dallas the third. But we usually get about anywhere to 30 to 60 people in here, and they're just growing every month. So if you want to come out and network with us, really get that in-person, face-to-face opportunity, be sure to join us. You can register for free on our website. And I do have another one of our Quest employees on with us, one of our IRA specialists, Zach. He's going to be posting all of these links in the comments for us so that you can get registered as we go along. So coming up, we have a 3-hour online CE course. So if you are a realtor looking for continuing education credits, this is a really great opportunity to get those credits for free without even having to leave the comfort of your home. So you can scan this QR code. It will take you to our website to get registered, but we'll post that link for you as well. This is a class that we have done before, so if you have taken it, be sure to kind of just stay tuned because we will be hosting some new ones coming up in the 2022 year. If you are a CPA, we also offer a course for you all. So we offer a hybrid CPE class. It's 2.5 hours, and we really give you that in-person and online feel. So if you are in our local Houston area, you could come out to our Houston office on March the 2nd and join us to get some fresh education. We've actually never taught this class. It is brand new. So any CPA that is looking for this credit hour can take it very fresh, get those credit hours as well. So one of my favorite events that we've ever done was a March Madness type of event up in Dallas a few years ago. We are kind of switching it up this year, picking a different sport, and we are doing Major League Investing, how to hit a home run deal. So this event is going to be really fun, a lot of client and attendee interaction at this event. It is in person, so we're going to have about 4 or 5 guest speakers coming out, doing a panel, sharing how they were able to hit a home run deal. And then with the help of our umpire, we're going to judge who had the best deal. We'll line them up on first, second, third base and kind of rate them as the MVPs. So kind of a little fun there, a little quirky, but also a really good place to get some education from experts that have done it, sharing their case studies with you all. Just like, the class that you're on here today, we have weekly webinars every Tuesday and Saturday right here at this time. Those are virtual, along with our virtual networking happy hours that we do as well. Those are the 4th Wednesday of every month. Those are on a new day, so be sure to keep that in mind as you're registering. But you can always go back and watch these classes if you missed them on our YouTube and on our Facebook pages. We do archive those, so if you have a friend that wants to learn about, Jason's class today, share it with them. We'll be able to have that link go out in the newsletters, but you can also always just find them on our website. And then the very last announcement until I, let him take it away, is the Quest Expo. This is probably my favorite event that I've been a part of my whole 5 years working at Quest, because the amount of preparation and the quality of attendees, the quality of speakers, of vendors, is just out of this world. When I tell you it's earned the largest self-directed IRA conference in the nation for a reason. This Quest Expo is incredible. We have over 650 attendees at the last one, and we plan to just, surpass that this year. Right now, tickets are in pre-sale mode. I can't promise how long they're going to be at this price because I know that, they did fly off the handle last year. But be sure to get your ticket to the Quest Expo. It's going to be in Houston this year, and it's a great place to really just expand your network and your education at the same time. If you want to get in contact with us, this is how you can do so. Feel free to go to our website or give us a call, send us an email, or scan this QR code. All 4 of those ways will give you access to our certified IRA specialists or our transactions reps that can help you answer any self-directed IRA question that you may have, or show you how you can get registered for an event. So without further ado, I'm not going to stop sharing my screen because I don't know how, but I'm going to let them kind of do it on the back end there for me. And we have Jason Engelman today, who is going to share for about the next 30, 45 minutes what he has to offer to you guys. So thank you so much, Jason. I'll let you take it away.
All right. Thank you so much, Sarah. And first, I want to thank Quest for the opportunity to be able to be a part of this webinar and be able to share a little bit of my story, and then also help your clients as you guys look to maximize your IRA accounts and capital in those accounts through private lending and through real estate. And so I really, again, appreciate the opportunity. I must say, Quest, I've been working with them now for about 2 years with several different clients of theirs, and they're always so helpful. Just recently, I'm very close to Derek. He's always helping me with one deal or another. And yesterday, Zach and Milan actually helped me with a couple of deals that we're working on. So I always appreciate the support and the staff that they have working to get these deals done. And then for you, the clients, for you who've maybe already invested with me or worked with me, I thank you for that opportunity to partner up and do deals. And for some of you who are new or you're wanting to learn a little bit more about how you can maximize your accounts, thank you so much for tuning in. And I'll get started and just go through this. So my name is Jason Engelman. I'm the CEO and founder of Freaky Fast Home Buyers and Investments. And today we're going to be talking about maximizing your IRA capital through private lending. But before we hop into that, I want to just tell you a little bit more about me in case if you're not familiar. I grew up in a pastor's home, and my dad pastors a church in Fort Worth, Texas, and he's been there almost 17 years now. And I've worked with him in his youth group and his teenagers and college age singles, and that's always a huge enjoyment of mine. I love being able to serve and work in the church. It's just an opportunity to really minister and help people. As you can see on my left, there's a much more beautiful person than myself, and that's my wife, Tori. She is a country artist, and we split our time between Nashville and Fort Worth. We have houses in both cities. She is signed to a label, and she just released a new single called Lucky that's out on radio right now. And as you could tell, she is definitely my better part. And there's a saying behind every good man is a great woman, and she definitely makes me a better person for sure. I started real estate in 2017 when we moved to Nashville. I was looking for something a little bit different. I had been doing investments in oil and gas, and that's such a risky investment anyway. And the oil market had climbed up to unseen numbers. I was 145 a barrel at one point, and then it just collapsed. And so I got out of that industry and was looking for something fresh. We moved to Nashville, and I was wondering, okay, what can I get into that's just a little bit different, but has some investment background to it? And got into real estate. I answered an ad on Craigslist. It was a company out of California who was looking for acquisition managers. And I knew nothing about real estate, but it piqued my interest. And so I just kept pestering them until they gave me a interview, and then they hired me. I worked with them for about 7 months and really learned the industry. And then they ended up moving to another city. And that's when I started my own company. And we started Freaky Fast in 2019. It was June of 2019. A lot of people don't know my story, but I literally, when I left that company, I was broke. I had just enough to pay all the bills, and I had about $20 left. And I went to the store, got some paper, and just wrote out handwritten letters saying, "I'll buy your house." And went to the post office, used that $20 to buy stamps, prayed over those, and I milled them out. And 2 days later, someone called me, and I was able to get a house under contract. I turned around and wholesale that contract to an investor friend of mine, and from there, just built my business. And I like to say that we've been able to grow because of a lot of hard work, but even more answered prayers. And so definitely been blessed. So over the last 2 years, we've done over $21 million in real estate, and or excuse me, 3 years, and we're in several different markets. Just a little bit about Freaky Fast. We started off with 3 homes, 6 employees, 1 market, and now we're up to 20 employees and 4 markets and over 200 homes. Like I said, just a lot of blessings. I want to just get into talking about how you can maximize the capital that you have in your IRA accounts, and how you can partner up as a private lender with investors, and how you can build and all the advantages that have by investing through your IRA, especially your Roth. When I first got into business, I've learned that there's 2 groups, and the first group is what I would consider a veteran. They've been doing this for a while. They've been to every conference, they've read every book, they've been to every webinar, and they've heard every different way that you can invest. And for me, I didn't realize that there was actual private investors out there that had capital, that they were looking to fund deals and pretty much lend to investors like myself. When I stumbled upon that, it's like a light bulb went off, and it really changed my life. And without the private lender, I don't think I would be necessarily where I'm at today. And so I'm forever grateful. But what I've also learned in the last 3 years is there's the rookie investor. Maybe they just started working and setting up their IRAs, or maybe they've had IRAs for a while, but they did not know the advantages of using that capital to invest. Believe it or not, there's investors out there like that. And this presentation is really to help you learn how you can plug into real estate specifically, and not necessarily own properties. That's something you can do, but maybe take a different route that's not quite as risky, but allows you to enjoy the type of returns that lenders receive. So for the rookie, I'm really kind of directing this towards you. For the veteran, it's always good to maybe rehear a presentation to maybe stir up an idea that you once did that maybe you haven't done in a while. So I'm just going to start here. Why invest in single family home rentals? That question gets brought up to me all the time. I know a lot of people like to invest through their Roths and IRAs in stock markets and mutual funds, but maybe they've never done it in real estate. So the question is, why single family homes? Well, just so you know, and I'm sure you're already seeing it in your own marketplace, just how crazy it's been. Properties have appreciated like nobody's business, like never seen before. A great example, I purchased a home in Knoxville, Tennessee, 4 months ago. And the ARV that I was thinking I could sell for was $250,000. And I just got off the phone with my realtor yesterday as we just finished the rehab of that home, and now we're ready to list it. And we think we can list it for $350,000. So it's appreciated $100,000 in just the last 4 months. And it's just a crazy time right now. And one of the biggest reasons for that is just a lack of supply in the single family homes. COVID really stirred up a lot of people. They were shut in their homes, and either they were tired of seeing what they looked around and saw in the 4 corners that day, and so they started rehabbing their house, or B, they started looking for something bigger that they wanted to buy, or C, maybe they millennials lived in their parents' basement or an apartment with some friends, and they just wanted to get out. They were claustrophobic and cabin fever, and so they wanted to buy their own property. And what we're seeing is just a huge migration of people moving into the single family sector. Because of that, you're seeing large companies like Blackstone, one of the largest hedge funds out there, saying that they're going to put millions of dollars into purchasing single family homes. I got a call last week from a broker for several different hedge funds, and they told me one hedge fund in particular is looking to buy 14,000 homes in the next 6 months, and they wanted me to try to help supply that. So there is a huge demand right now. In fact, there's such a short supply that people are now going and building homes for rental properties. And so what does that mean to you, you may ask? Well, this is an opportunity for you to capitalize on a hot market and get involved, whether you're a doctor or you're an attorney or maybe you're a tech expert, and real estate is not your expertise. So you don't necessarily want to build, you don't necessarily want to own a rental property, but you want to capitalize on the market. This is for you, and we're going to talk about how you can do that. Here's the advantages, like I mentioned just a few minutes ago. First of all, probably the hottest market in history, just a huge transfer of wealth in real estate. And so right now is the time to capitalize. A lot of people are trying to say, well, there might be a downturn, and yes, that could potentially happen. Maybe it starts slowing down. But I think what we're seeing is a new precedent for affordable housing. What I bought 2 years ago for maybe 60, 70,000 is now going for 125, 150. And I think in those types of markets, it's going to sustain that and stay there. And that will be the new precedent for affordable housing. So now's the time to take advantage. Real estate is a low risk. And, maybe some of you lost lots of money in 2008. And I was 18 years old, a freshman in college. And so I knew what was going on, but I didn't experience that. Real estate wasn't as secure. I mean, yes, you had the tangible property and your money was safe, but what was happening was values were being inflated through mortgages, and it just set a unstable foundation. Well, after that collapse, the government came in and put in new regulations and laws to really try to prevent something like that from happening again. And what we've seen over the course of history is in a downturn, it usually attacks a different sector. It doesn't ever attack the same field or same market or same sector twice in a row. So what we're anticipating, or a lot of economic experts are anticipating, is something maybe in the stock market. We already saw this week huge crashes since I guess the biggest crash, they said, since early 2020 when we first went into quarantine. So we're already kind of seeing the market make a shift, make a change, and start correcting itself. And real estate provides a very low risk opportunity for you. Why? Because you have a tangible property, something that is collateralized, whether you're lending on that property or whether you're buying that property. Your money is secured by that land and by the building, whether it's a home or a commercial building. Right now, you're getting incredible returns. As investors and lenders, you can get anywhere between 6 and 8%, as high as 15 to 18%, just depending on what opportunities you lend to, whether it's maybe short-term acquisition for companies like myself to go in, fix them up, flip them, and sell them, relatively quickly. Then you'll be able to increase your revenues, and those ROIs just spike. And we could talk about that just a little bit more. Obviously, this is probably, in my opinion, the biggest one for you guys is the tax benefits by using your Roth. So if you've got capital in your Roth, then you can lend money out, and those profits that come in won't be taxed. And it allows you to build that up and save money from having to pay Uncle Sam. And there's a lot more benefits and that you could talk to at the staff at Quest, that they could walk you through and help you understand that better. Your CPAs, and they'll be able to help you as well. So definitely take advantage of that and look into that. So if you've got capital in your Roth that is just sitting there, definitely look at the opportunities to invest. And you can invest any amount. It doesn't have to be 50,000 or 100,000. I've got some clients who have invested as little as $500, and that profits that came in helped them build their Roth at a much quicker rate, and then save them money from the tax benefits. And then lastly, another advantage is just building passive income. That's why we're in this business, is to be able to allow your money to work for you. There's a lot of rich people out there. Rich people are guys who are doctors or lawyers or football players. You make a lot of money for what you do for work. But the wealthy people are the ones who are able to take that money and allow that money to go to work for them to continue building their empire. And this is what we want to do for you. This is what Quest wants you guys to be able to do. And that's why they put on these webinars to allow you to learn the different opportunities out there to really increase your opportunity and build your family's empire. So I'm just going to go through some of the opportunities on how to find deals that you can lend on. Some of you may be out there being like, okay, this sounds great, and I want to do it, but how do I begin? How do I start? So I just want to kind of give you the basic points here, and then we'll go through each point and help you understand exactly how to go about doing that. And I just want to check my time. So I got about 15 minutes. First, you have to find the deal. That's probably the most important part. And the good news is there's hundreds of deals out there for you to find. And you just have to know where to look. And we'll talk about that here in just a minute. You have to know the market. Depending on, there's a lot of great markets out there, and you want to be able to figure out which market works best for you and which market is maybe a better, safer place to invest versus other markets. The most important thing, in my opinion, is know your numbers. You win and you're successful by numbers. And when you buy that property or you lend on that property, you want to be able to know exactly how much capital you've put in and what you can expect to get back. I've been told hundreds of times you win when you buy. So know your numbers, and we'll go through that and how you can feel confident that you're in the right deal. Security of capital. How is my capital secured when I lend it? And then also, what can I expect when I lend my money out? So how to find a deal. The easiest way is family or friends. And that's how I know a lot of people started lending. Maybe they had a relative who flips houses, or they have a friend who flips houses, and they already have that trust that's built in. And they trust that person, and they maybe have seen that person do work for the last couple of years, and they've seen success. And so it's easy to go to them and be like, hey, what are you doing? I need to figure this out. I've got some capital in my Roth IRA or my traditional IRA that I need to deploy. Help me out. Do you have any deals that I can invest in? So family or friends is probably the easiest way to start. I know a lot of people don't like working with family or friends, and so there's other opportunities. And the second one, in my opinion, that's a phenomenal way is investment groups or conferences. So, for example, the Quest conference coming up here in September. If you need to be there, and you need to go and listen to all the speakers and go to all the booths and really be a good steward of what Quest is providing you guys. So go to these type of events, shake hands, network, and that's where a lot of great deals are done. That's how I really got to know a lot of people at Quest on the staff. Was at a couple conferences that I was speaking at and they were speaking at. So conferences are a great way to network. Investment groups, RIAs. I'm involved in a couple of RIAs that have several clients who are involved with Quest as well. So they're clients with the RIA that I'm involved in, and they're clients with Quest. And so that's how I've been able to do a lot of deals, is by going to these investment groups and showing, the different opportunities that I have for those guys to invest in. So if you go to an investment group, you'll be able to hear guys speak and present the different opportunities that they have, and you'll be able to meet them, network, and learn more about their opportunities. And then real estate investment company, there's hundreds of companies out there, and there's a lot of great companies. You just have to do your due diligence and reach out to them and see what type of opportunities they have, look at their prospectuses and their decks, really go through that. And they'll be able to help you. A company like myself, we're fairly young, and so we are growing, and we're always looking for partners to grow with. And there's companies out there left and right that are looking for investors like yourself. So take advantage of the opportunities. Next, know the market. This is so important. There's so many markets out there. For example, California is probably not the best market to invest in. I'm sure there's great deals out there, but you really have to work. The competition is incredibly high. The prices are incredibly high. Your returns are sometimes incredibly low. And, so California might not be the best market to jump into, but a market like Cincinnati, Ohio, where we're in, is the hottest market in real estate right now. You list a house on the MLS, and in 9 days it's under contract. It's incredible. You're wanting to look for markets that there's plenty of opportunity. You can get a good deal with a great return, and that city or that market is growing. So you want to look for things like population and job growth. Is this city growing or is it decreasing? Are people moving out? And that's not always an indicator. There's some cities where people have moved out, but there's still great opportunity. But it's usually a good standard to put into your formula when you're deciding whether or not you want to lend on a specific deal. Is this city growing? And is there job growth? Is there reasons why people are moving here? Economic structure is very important. You want to have businesses there that are growing and they're creating jobs, and people are moving there to go work at these companies. And I have another slide that will kind of demonstrate that. But Cincinnati, for example, has a lot of different industries that have created jobs, and that's why it's growing. Real estate transactions, like I mentioned earlier, Cincinnati, houses on the market for 9 days, and it's growing, it's booming. So you want to look and see, are houses sitting on the market for months and months? Are they moving? Are they decreasing their listing price? So maybe they started off at 250 and it sat for 30 days, and so they dropped it down to 225, and they continue to drop. Well, that is a red flag saying, I don't necessarily want to invest in that market because I don't want my capital tied up for longer than what we were expecting. If we can handle that or manage that and make sure that we try to stay in those timelines. So the real estate market, the transactions, the temperature of that market is very important. So that's stuff that you can Google and you can research to help you have a better understanding. This is one that is a criteria. However, you don't necessarily always have to go by this criteria as much. Crime and education. Is the crime rate's extremely high? How is the school system? Now, for example, Gary, Indiana is well known for being a city that the crime has been really bad. Education system very poor. However, I've got a lot of friends who've invested into Gary, Indiana in the last 8 years and have done tremendously well. So crime and education is something to consider, something to look into. But for me, it's not a huge priority because that is part of real estate. Going into neighborhoods that are maybe a little bit on the down and people are not necessarily looking to get in, and you're going in there to provide opportunity to make that market and that neighborhood a better place. So sometimes crime and education isn't always a deciding factor for me, but it is something to definitely look at. So real quick, when I was talking about, looking into your markets and really trying to figure out, we're in Columbus, Georgia, and Cincinnati, Ohio. And both of these towns are a little bit different, but have a lot of similarities. Columbus, Georgia, for example, is about 200,000 people, whereas the Cincinnati Metroplex is over 1 million. But they have similarities when it comes to their economics, and I'll show you here on the next slide. So Columbus, Georgia, for example, is known for Fort Benning. It's the largest economic stabilizer there in Columbus. And, a lot of times people don't want to necessarily invest in a town that's just military based, because if there is a decrease in the military, then that town could really take an effect in the economic environment. And so a lot of people don't like investing in a town that's just military based. And that's what makes Columbus great, is it also has Blue Cross Blue Shield's headquarters, Aflac's headquarters, TSYS, which is the largest credit card processing company in North America's headquarters is there, Kia Motor Plant. Cincinnati has Gillette, has Procter and Gamble. It has Kroger's, for example. So you're seeing these businesses that have several different, what I call economic stabilizers or circuit breakers. So for example, if one industry maybe takes a hit, there's other industries that will stabilize to where you don't necessarily feel the effects. Both of these markets have great medical districts. Both these markets have universities. So there's a draw that is in these markets for people to go to that will allow that real estate market to rise. You're seeing appreciations, you're seeing rent increases. So look for markets that have, or look for deals in markets like that where there's different circuit breakers to help you in case if there is a downturn. So do your research. It's easy as just getting on Google and checking out the city and news articles, or the city up. The city will put a website. The city will have a website, and they'll put updates of what's going on in the economic environment, and you'll be able to get a good feel for what that city has to offer. Again, I mentioned earlier, know your numbers. In my opinion, this is probably one of the most important, if not the most important aspect when it comes to investing, whether you're lending or whether you're buying. Know your numbers. So first thing is know the ARV, and that stands for after repair value. So for example, let's say you're looking to lend and Joe has a property that he wants you to lend on. He'll bring it to you and he'll say, okay, this is the amount that I need to purchase the property and rehab the property. Say it's $50,000. I need you to lend me $50,000 to secure this property and rehab it. Well, you want to know if that property is only worth 40,000 and you're over leveraged, or if it's only worth 60,000, so there's not much margin there, or if that property is 100,000 and the value of that property is exceeding after the repairs are made. So the ARV is probably the most important number. And you say, well, how do I figure that out? What I provide my clients is 3 comps of recent sales within half a mile radius of the subject property. Now, appraisers, when they go for the banks to appraise the property, they'll sometimes do within a mile or 2 miles. But for me, I like to be a little bit more conservative. So I will do a half-mile radius of the subject property, and I want at least 3 properties that are very similar in bedrooms, bathrooms, square footage. And I want to be able to see, okay, is that property, it sold for 200,000. Well, why did it sell for 200,000? So I click that property. I want to see if the property's been rehabbed, and I want to see pictures of, new floors and new walls and new paint. And I want to be able to tell that some investors got in there, rehabbed it. If you don't see pictures and it sold for 200,000, well, that could be a red flag that maybe it was a bundle package and that house isn't really worth 200. So you want to dig deep when someone gives you comps to say, okay, are these comps valid? Are they comparable to the subject property that I'm about to lend on? Loan to value. You obviously have probably gotten a loan with a bank on your own personal house. Banks will loan 80-20 or 70-30 or 75-25, and you've got to put money on the table. Well, you want to know what your loan to value is and what your comfortability is. So for a lot of people, they only want to loan up to 70% of what the ARV will be on that property. They want that security that if for whatever reason they've got to foreclose on that property, that there is room for them to make profit and that their money is secure. So the best way to do that is simple math. Just find out what the ARV is, and then divide your loan to value by the ARV, and that will give you a percentage. So find out what that percentage is comfortable for you. My recommendation is no more than 75%, unless if it's just a laid down deal. And I only recommend that to people who've been lending for a while that understand the opportunity, but then also the risk. So if you're a beginner, I'd highly recommend your loan to value being around 75% or lower. Your rehab budget. So if you're going to lend, have your investor give you a rehab budget and let them see exactly where that, or let them show you where the dollars are going. And so you can understand, okay, it's going to take $10,000 to paint the inside of the house and the exterior of the house. It's going to take $10,000 to put on a new roof, and it needs new HVAC. And so you want to know where the money's going, and they're not inflating their numbers. And that will also give you an understanding if for whatever reason you would have to foreclose on that property, that the value that's in that house. And then lastly, know your numbers. What kind of interest rates are you getting? For example, our company, a lot of our loans are 12% interest and 2 origination points. And depending on how quickly I turn those loans will determine the year's ROI on that. So for example, if you do a 1-year note, then you made 12% interest plus the 2 points. So that's 14% interest. Your money just made for you on something very low risk. If you are able to do multiple deals with that same amount in 1 year, then that ROI goes up. So know your interest rates, but then also know your late fees. If your borrower goes over the maturity date, know what you're expecting to get in return that will make it worth your while. So know your numbers. I don't know if you'll be able to see this. This is really tiny, but this is just a sheet that I send out to my investors. That if I have a property that I need a loan on, I'll send them the address, and below are the comps, and it'll say the similarities between the beds, baths, square feet, and the distance from the house. Security of capital. So you may ask, okay, how is my money secure? How am I able to lend money out and it just not disappear and evaporate? Well, first of all, what makes this investment so low risk is the fact that you're able to put a mortgage or a lien on that property. So your investment, your loan is secured by subject property A. And that's what protects you. And the way you're able to do that, depending on the state, is a mortgage or a deed of trust. And that's just simple terms, a mortgage that is filed with the county that secures your investment with a lien. And that person can't sell that house until that lien is satisfied. And then the promissory note is the contract that has all the details laid out between you and the borrower and what you're expected to get in return, consisting of interest and origination points. Check my time here. Got just a couple more minutes. Know your expectations. So understand, okay, I'm investing for, or I'm lending for 12 months. And I need to check, periodically with the lender and see how that deal's going. Or maybe it's 4 months. Understand what the market's doing and how that can affect the time frame. For example, a lot of my jobs, maybe there are 4-month loans, have gone 6 or 7 months because materials right now are in such short demand. 4 months ago, they weren't, but something has caused them to not be readily available. And so that can slow down loans and slow down the closing of a property and paying off that loan. And then understand the risk. I mean, there is that potential of a foreclosure if your borrower doesn't pay. I know we're wrapping up here, and I've been talking fast, and I know on webinars they can be very boring, and I hate being boring. So I want to give you 3 things that will help you in your everyday life, whether you're a lender or a borrower, whether you're investing through your IRAs by lending, or whether you're trying to grow your investment company or business, or maybe even just you personally. Set goals. So important. Maybe you have 100,000 in your IRA and you're like, you know what? I want to build this up to 150 by the end of the year. Well, you need to figure out how many deals that's going to take for you to do that. Figure out what kind of ROI you need to get from each particular deal to help you hit your goal. And that's a way for you to track it. And that's a way for you to say, okay, this quarter I would need to do 2 and I was only able to do 1. So next quarter I need to improve. What did I do wrong that did not allow me to hit my goals? And you may say, well, why is this so important? I'm just putting money in my ROI, or excuse me, my IRA for retirement, because you obviously need to be a good steward of what you've worked very hard for. And there's opportunities for you to go out there and to increase and build your own accounts through opportunities through passive income. And the best way to grow is by setting goals. So set goals, work them out, maybe sit down with your wife, maybe sit down with your family. Maybe you have young kids and you can teach them at a young age how to invest and how to build passive income for their future. And that could be considered a business meeting. You can write that off on your taxes. This is something important, and this is kind of something that makes you smile. But I think it's very important. Don't lose your head. And what I mean by that is I'm always reminded of this scene in Wonderful Life. And um, the mean man, the rich man in town that everybody hated, wanted to hire George Bailey. And they're sitting down, and he offers George Bailey a job. He says, "The reason why I want to offer you a job is because when everybody went crazy, two people kept their heads, you and me." And for a Potter to say something like that to a young businessman, that was a huge compliment. What I mean by don't lose your head. In when COVID first hit, I was freaking out. I was nervous. I just built this business. We're just growing. And I decided, you know what? I'm going to be proactive versus reactive. I didn't want to react to what was going on around me in the market. I wanted to be proactive. So I reached out to my tenants and try to help them make sure that they can pay their bills and pay their rent and get help if they need that from the government. And I reached out to my investors and let them know my plans on how I was going to pay my mortgage payments to them and how they weren't going to be affected. Maybe they lost money in the stock market, but they didn't have to lose money with me because I was prepared. So when things get tough, things are going crazy right now in the market. There's going to be downturns in the next 24, 36 months. I guarantee it. Something's going to happen. Don't get scared. Don't lose your head. Don't panic. Be proactive, not reactive. Be careful who you listen to. If you listen to someone who's always negative, it can really dampen your spirits and keep you from making wise, smart moves. So be careful who you listen to, and a positive attitude is always key. Positive attitude. And then lastly, know your why. Why are you doing this? Are you trying to build a future for your family? Are you wanting to maybe retire early and be able to give to charities and ministry work? What is your why? It's so important. You'll hear hundreds of gurus and experts and speakers say that. And I would always be like, okay, I need new information, like new material. Come up with something else that I haven't heard a million times. But it's so important. It's the best thing that someone can give you is know why you're doing what you're doing. So when things do get tough, you have the encouragement to keep going forward. And I know we're about out of time. I have this one video that I would like to show you on my next slide. It's about 2 minutes long. And this is my why. Let's see if it'll play here. Well, it doesn't look like it's going to play. Well, anyways, guys, that is my presentation. I do appreciate you listening. Hopefully, some of the information I've given you has been helpful. And again, I'm always here to help any way I possibly can. And I guess this is time for some questions. So that's my question.
Awesome. Thank you so much for that. We've had a lot of conversation going on in the chat box. I know they've been networking and kind of talking about some self-directed IRA stuff. If you guys have questions for Jason, go ahead and send those in now. I did see one question up here. This was in regards to finding comps, and I'm not sure if this was a part of like the conversation that was going on. But where do you acquire comps? This person asked Zillow. Where would that be?
Yeah, be careful with Zillow. Zillow is very inaccurate a lot of times, especially in specific markets. So like if you open up or Google an address and Zillow will pop up and it'll say this property is worth this much and they call it Zestimate. Never go off that. It's usually very inaccurate. And what they'll do is they'll pile in a bunch of properties that have sold within 3-4 miles, and then they average it out, and it's just not accurate. I like to use REI Pro. That's a site that I use. I think it's like $100 a month, and you can literally pull up any property in the country and get tax records and history of that property and how much it sold for. But then it also allows you to compare other properties that have sold in that area. There's lots of platforms that offer that. And what I'll do is this. So on REI Pro, for example, they'll have the comp and then they'll have a link to it. And you can click that link and it pulls the address up on Google, and you'll have different options like Redfin or Zillow. I'll click that link to see if maybe there's pictures of that property on Zillow to see if that property has been rehabbed or not. So that's how I use Zillow or Redfin to comp. but I'm looking for properties or I'm looking for what's the word? Platforms that have all that information that's as similar to MLS as possible.
Awesome. I see a bunch of comments here. I've been kind of putting them up there so you can see them as well. Really good presentation. Loved your success points. A lot of people saying thank you. But guys, now's your chance to send in questions if you have them. Maybe while we're waiting, what is one point of advice that you can give for new self-directed IRA investors that have just opened up their accounts and want to get started? Like, what's the first thing that they should do?
Oh man, there's like 100 different things that they could do. I would say go to the Quest event in September.
I love that.
I know that's a shameless plug there for you guys, but it's very true because you'll be able to network with other people there. As you know, and I'm not for certain how much Quest can advise you because they're not financial advisors. They're
Right.
custodians of your capital. So they might have webinars like this that allows people to come in and present and teach. But then those people are experts in a specific field. And so maybe that's their way of introducing you to them, or like their conference where they'll have speakers and booths and so forth. Investment groups, conferences, go there to meet the people to start finding the deals that you can deploy those funds. And like I said, you can deploy any amount of funds. I've got some guys who have done as low as $500 just to get started.
Yeah.
So really it's finding the deal. And the way to find a deal is use the opportunities that Quest is providing you to meet people that have those deals. There's hundreds of deals out there, and I guarantee it, those people are looking for money to fund those deals. So you've got the money. It's your job to somehow meet them and bring the two together.
That is a great answer. Yep, you nailed it right on the head. One of our attendees asks, are you considering any other city areas?
Yeah, so I've actually already started purchasing homes in Knoxville, Tennessee. I just purchased some lots in Cape Coral, Florida, and I'm going to be doing new builds out there. And so I've had actually a couple Quest people who said, okay, I want to get involved in something like that. So those are a couple markets we're looking at. Fort Worth, Texas, where our headquarters is. We're doing some deals out there. I'm looking in a couple different markets in Alabama, Indiana, Pennsylvania, and Oklahoma. I do like to try to stay, I know this may be off topic a little bit, but I do try to stay in red cities. I feel like, or red states, I feel like they are a little bit more for the owner of the home, like if it's rental properties. So I'm looking for markets like that. One reason why I do like Pennsylvania, because it does kind of go back and forth between blue and red, is just some of the opportunities that are there because it went down so far. Now it's coming back up. So I would say Pennsylvania is like really the only state that I don't really follow my advice, but I like red states. So Indiana, Alabama, Ohio, Florida, Georgia, Tennessee, Texas, Oklahoma. Those are all really good markets.
Perfect. Just to kind of round it out, one of our attendees said, where can I get more information about traditional IRAs? If you want to talk to a self-directed IRA specialist, you can always contact us. I'll have Zach post our contact information one more time before I ask this last question. But we're always available for you. You can call us or email us. We'll be available. But lastly, how can our attendees contact you, Jason? Would you mind putting your contact information and saying out loud for us?
Yeah, so you can reach me at jason@freakyfasthomebuyers.com. Do I need to type that out here?
I'm doing it for you.
Okay, jason@freakyfasthomebuyers.com. That's probably the best way to get a hold of me. And send me an email, and then we'll connect, and I'll help you any way I possibly can.
There we go. Putting that up there for you. All righty. Well, Jason, thank you so much for joining us. And thank you to all of our attendees. If you'd like to go back and rewatch this class, it will be available on our Facebook and on our YouTube. Share it with your friends. Jason, you'll have that available for you as well. But once again, thank you all so much. And we hope you enjoy your Saturday. Thank you.